The global financial crisis between 2008 and 2009 was one of the worst contemporary financial crises, and it had a serious impact, as about 10 million American citizens lost their jobs because of it, and many companies closed and went bankrupt, the first of which was banks. Even the average per capita income has fallen from global GDP by more than 6%. But to understand this crisis and see the possibility of its occurrence in the future, let us go back a little to the late 90s and early 2000s. During that period, there was a major financial crisis in East Asia, and as a result, investors withdrew their money from those areas and put it in American banks. Of course, American banks found that they had liquidity in their hands, and it has become necessary to move it and operate it. And the best way in their view is of course that they lend this money to companies and individuals and get a profit through interest. And in fact, this is exactly what happened. Banks are offering more loans to individuals so that they can buy homes. In the beginning, the work in banks were like a normal business, checking the people who benefited from the loans. Does he have enough assets? Does he have a good income? Is it safe to get the loan or not? However, with the increase in loans, house prices became rising, and everyone began to believe that house prices were constantly rising and that this was a safe investment, and because of this thinking, everything started to go in the wrong direction. Instead of going to the like and subscribe button, the banks are thinking why we have to scrutinize a lot. Let us offer loans to everyone, whether they are able to pay or not. If he pays, he is welcome, and if he does not, we will book the property, and since the property is always rising, we win in all cases. Indeed, the banks began to provide loans in a large, random, and illogical manner. Dear viewer, this was only the spark of the 2008 crisis. The situation did not stop at the banks only, but it became worse and worse. Banks, to increase their profits, made a cheap move. They collected hundreds and thousands of loans and put them all on one bond called collateralized debt obligations and sold them to other banks and other financial institutions. And surely you are wondering how these banks agreed to buy these bonds. And here is the crux of the matter, the role played by the insurance company AIG. This company was guaranteeing the bondholder, if the creditor could not repay his loans, that it would intervene. Exactly, AIG was taking the CDOs we mentioned, putting their name on them and calling them credit default swaps, which are the same as the old bonds, but on the grounds that they are secured and guaranteed. Thus, financial institutions start buying these bonds, thinking that they may be dangerous, but they are insured. I mean, as you notice, it is a sale over a sale and the issue has become thorny. This is how business in AIG moved to highest speed. And in just 5 years, the returns of this section of the company have tripled, which represents 17% of the company's revenues as a whole, and it is a huge company, and they get money almost for nothing, just putting their name on these bonds. Beautiful, true? No, that's wrong, dear viewer, because AIG coveted the market and started offering insurance that exceeded its ability. Of course, insurance companies such as AIG have almost assets that cover insurance costs, if they have to pay them. And, as we've explained, AIG has started offering insurance that's way beyond their capacity, which means more than they own. This means that they are not able to actually pay if a problem occurs, but AIG was not afraid because they were sure that the real estate market would continue to rise, so there was no need to worry, and in fact this strategy was successful. But of course what is built on falsehood is false. True, it was fine for a while, but eventually the black day came. Some of the loan holders who were in poor financial conditions, but who took advantage of the loans, became unable to pay the debts and interest imposed on them, and thus offer homes for sale. And of course we know what happens about the oversupply, while demand does not rise evenly, so the price has been falling rapidly. Do not forget that the owners of the banks used to think that the owners of the loans, even if they were not able to pay, there is no problem that we will withdraw the houses from them and seize them, and since their prices are always rising, things are alright. But they did not consider the problem that occurs with supply and demand, and with it the houses they took, their prices were rock bottom, and with this, the banks got in trouble, and the same thing was the financial institutions that took bonds from the banks, and they believed that even if the bank had a problem, there was no need to worry, we are safe. But they were not aware that the insurance company AIG did not have what covered this insurance, and as a result, the bank of Lehman Brothers fell as one of the first and most important victims, and thus the panic began and the global financial crisis started from USA and spread to the rest of the world. Dear viewer, you have not seen the woe yet. As a result of this crisis, many companies have gone bankrupt, and even companies and fields that have no relationship have been damaged, and as a result of this crisis, 1 year erased 10 years of rise in the stock market. And surely you are wondering about what happened and about the fate of the insurance company AIG, but we will leave this topic for an upcoming episode, so make sure that you subscribe to the channel and activate the bell button so that you know when we upload. And if you liked the episode, don't forget to give us a like and share the episode with your family and friends. Rashad, the presenter of your program Hit the Road to Fire, was with you. See you soon.